All right, ladies and gentlemen, today we're going to be covering the big and bad NQES divergence trade. Now, this is more of a high level trade idea. You will need to have some background into auction market theory, some degree understand value areas in order to perfectly or correctly digest this strategy. I'm going to briefly cover what the trade entails, what to look for, and then at the end of the video, I'm going to show you guys a live example from one of my live streams, which is this exact screen we're looking at. We're going to play it through, kind of talk over it. I'm going to link the video in the description from that live stream. So if you guys want to see my actual commentary from the very day I took this trade and walk through it, you can do so as well. So without further ado, let's get right into it. We're going to start with the very principal ideas of this trade and why it works not every time. So no trade is actually 100% works. But there's parameters or principles to follow in order to identify this opportunity to be in play. And that is, we have to understand the NQ can lead the ES or up or down, right? The ES is the SPX futures, the NQ is the NASDAQ futures, and we understand that the ES has a component that is heavily weighted in the tech sector, and the NASDAQ is exactly that tech sector that most times will lead in either direction if it's lagging or outperforming. That's one of the principles you must understand first and foremost is that correlation exists, which is why this opportunity to find this trade lies within the market. And this seeps into the second segment, right? So as we're going to segue, we're going to have to understand that the key thing here is to identify whether the NQ, the NASDAQ, is outperforming or underperforming the ES or the SPX. So if the ES is at least above the opening price for the current cash session, we're trading the cash session. These are from cash examples, so not from a overnight session or any other session. This is directly correlated and linked to the cash session only. And if you don't know what that is, just do a little research. It's the regular New York session. That is what I primarily trade. And the ES must be trading above its opening price and to some degree at its value area high, while the NQ is trading below its open and near at balance or below its value area low. Now, these are the things that you'll need to understand because this is going to be completely correlated to those terms here in that trade. And if you don't understand what that is, check out the videos. I have a few videos explaining auction market theory, balance zones, value areas. I'll put those in the description for you, but feel free to subscribe and do more homework to better understand this trade. Now, I explained that this can work if the ES or NQ is above or below their open. They work in both ways. So if it can be vice versa. It doesn't matter. They could either lead up or lead lower. And what I mean by that is the NASDAQ can lead the ES lower. So if it's trading, if the ES is trading here and the NASDAQ's down here, it can lead it back into its balance, or the vice versa can the inverse could be true as well. If the NASDAQ's outperforming and the ES is at its value area low, they end up to balance out at some point, they level in. And that's what a divergence is, right? So I'm going to create a visual representation of what that looks like really quickly. Now, this is a bell curve distribution of price for the ES, labeled ES. This is one for the NQ. This visual representation is the component that I use to filter out whether this trade is valid or not. So if you don't understand this curve, feel free to watch my How AMT Moves Markets video. It'll explain kind of the value areas, how to interpret this. But in this current DOMS, you're going to see this distribution of price form on the volume profile section on this. So as we play the live trade example, I'm going to be referencing that column a lot to identify whether we're trading at a value area high, which is going to be the third of one standard deviation above its current balance or one standard deviation below its current balance. And same thing NQ above its balance or below the balance. So the principle is that the ES should be trading up here near the top quartile of its balance area, right? Value area high. That's what this is identified as. And the NQ should be trading near its lower end of its quartile of price distribution, which is the value area low. And the theory here is that as long as the NQ remains near its value area low, then in theory the correlation can exist and the balance they should balance out where the ES should come back into its balance zone, okay, back into its point of control where most of the volume has transacted. And that is essentially a mean reversion trade. So the NQES trade is a mean reversion that most times is just a scalp, so to speak, but can also result, if trend continues, in a further move to the downside. So what can happen is we can trade into balance, lock in some profit, and then break the distribution completely, and we can completely sell off. Okay, it's usually initially starts as a scalp back into its balance zone, and then it could turn into a huge leg in either direction. So that's a visual representation for you. I hope that kind of makes sense for you. If you don't, leave a comment and leave a message in the comment section. I'll respond as soon as I can. So on here, I have a little notepad, kind of some bullet points to look at as I'm about to play this clip out. So we can kind of walk through it. But what we're going to be looking for is the ES trading at its value VAH, which is value area high. And then you'll see me betting that it will reverse back into its balance zone. I'm going to be highlighting those balance zones, showing you where I'm entering the trade. You're going to see where I enter the trade as well, but I'm going to be highlighting those zones just to kind of give you a better focal point of reference as to why I'm shorting those zones and how this all ties in to the previous image that I tried to provide as a visual representation of the auction market theory. And then trading, NQ's got to be trading near the low end of value, BAL. And as long as price holds below the open part of the balance, this can weigh on the ES and bring it down. Okay, so that's pretty much the principle here. And again, this can work to the upside as well. Really quickly before I start to play the video, you need to understand that price, the things that are going to be shown on this DOM, right? So the DOM here, this is the NQ DOM, and this is going to be the SPX or ES DOM. You can see really quickly that market opened here. This was the opening price, the 41 of the NQ. And then this is we've already transacted. So we're a little bit into the open. And again, I'm going to leave the video in the description below. It's one of my live streams. You can look at it anytime. But you can see that the curve of distribution is already forming here, right? This is obviously the same curves I drew out in the opposite direction since the volume profile is on this side of the column. And you can identify is that the purple areas will be the balance zone. So this is balance essentially where the most amount of volume has transacted at this time. These balance zones and value areas shift as transactions come through. And the same thing applies with the ES. It's very thinly traded so far just because we're a few minutes into the open. I do currently have a short on the NQ. I got in short pre-market. That's not a trade example for this video, although I will be referencing it down the road. This is primarily to talk about the ES short that we took on this DOM here. Okay. Now they both ended up being profitable trades, but nonetheless, let's dive in. Now, before I even take the trade, there's context you got to take into account. So I'm going to let this video roll through so you can understand the full picture of what's happening. We've already been open for about 2 minutes. We're trading near the bottom end of the value area, which was the purple zone. This is value or anything that's a mint level. You're going to notice that a lot of transactions start to occur right at the opening price of the NQ. So as we're trading down in this little lower end of the quartile, we're spending a lot of time there for one after opening price. And a lot this general area where the open is occurring, one of the first few principles that I kind of tell you a divergence is at play for the NQ, it's going to start to form because you're going to see this bulge area start to get thicker and thicker as transactions come in. So we're going to let this roll through because you're starting to see this build out. So as I've been commenting on this, we're about 1 more minute into the open past the previous video, and a lot of transactions are forming here. Now, why is that important? Because that tells you that a lot of people or a lot of participants are initiating trades, whether long or short in this zone. Anything that gets formed here, it's both sides transacting, buyers or sellers. So as this node, this bulge starts to form thicker and thicker, you can use that as a focal point to understand that one, we're at the lower end of the opening balance, which is not bullish at all. And then two, there potentially can be some stuck traders transacting here, either up or down, betting that price will come back into balance or break out for the day. And so that is a very critical component of this trade. So let's check that into context. I'm gonna let this thing roll through a little bit more. You can see that as I've been kind of commenting it over, we've definitely doubled the size of this node now. It started with about 300 contracts, now about 700. So just keep in mind that that alone already signifies that there is a change in participation. We're dropping below that bulge, and then also the ES is currently trading in its balance zone. So if you're looking at the distribution of the curve, NQ is trading near the bottom end of its distribution. So let's draw that out here as this is trading. This is the curve. NQ is trading near the low end, and the ES, this one here, is trading in the center at balance of its curve. So right here in the middle, right, as you can see here in the purple zone. So they're obviously already decoupled or divergent. So the importance here is where can we as a trader identify the most value for my short if I believe that divergence is going to pay? And that is going to be at the value area high, which is the mint levels on the ES, which is exactly the zone that I'm going to be targeting to short on the ES, because as we're going to get the most value for my position, assuming the divergence is going to play out. So let me just draw the visual representation again. This is the curve for the ES. We're trading right here at the moment in the middle of balance, the thicker part of the profile. And this is the value area high where that mint level is, the thinner part of the profile. And then the NQ is completely at the low end of the curve. You can see that now the balance zone was above us. 41 is just about here, and we're trading near this bottom end of this range, right? So they're definitely decoupled to some degree. Now, I do have a short currently open. As you can see, the P&L is working out in my favor on this short, but I'm not adding anything yet on this ES short. And the reason is I particularly like to short the value area high when I'm trading this divergence, because they have a tendency to run stops. If you enter a trade here, one of the laws of distribution is to not initiate a trade at the point of control or balance zone during a distribution. And so I'm going to be patiently waiting for this area to trade, which is where I'll initially add some of my position. And then later on, I add 5 more contracts again for a total of 10 micros on the ES. So we're going to kind of let this roll through and play out. Again, this is one of my live streams, so you're going to hear my commentary if you played the actual video. I'm just talking over it right now to kind of give you some context. All right, so fast forward a few minutes here. We're about 10 more minutes or 9 more minutes after the open, and we're still trading within the same range on the ES. Again, referencing the distribution, we're now at the value area high, at which point I start to see the ES start to trade near the highs. Take a few stops here on the footprint. You can identify that stops were taken. There was no follow through, so I initiate a short there at that 74.75, a few ticks on that little push up. If you were watching this a little bit before, you can see that there was an aggressive push up. It doesn't necessarily mean that a bigger move higher is afoot. Most times they're just taking early stops, anybody who got short the open. So it's important to identify that just because there's a push up doesn't necessarily mean there's further upside to be made. Most times they're just pushing liquidity up to take any stops out of the way. So here's the value area high we're waiting for. Again, this is the mint area reference on the volume profile print on the DOM. That is exactly where I initiated some of the trade. The NQ is still below the key area, again, referenced on the principles here, below the open. So as long as we're below the open, I'm comfortable with holding this short. If you watch my live stream, you're going to hear me reference, as long as we're below the open, the thesis is valid. So I will continue to hold this trade. We're near what some of my entry. I had scaled out some of the trade, take some profit, added more to the short on the NQ, but that's not the point of this trade here. You can see that some absorptions taking place on the footprint as we're trading near the high of the day for the current opening range. And we're going to just teeter here for a little while, waiting for this to pan out. I'm going to let this roll through a little bit. I'm going to fast forward and just kind of trying to get you guys the video as short as possible so that way you get the most value for your time. All right, so here we are, a couple minutes, just fast forward again. And you're going to see the NQ continuously attempting to break past closer to the open, but every time it does, it gets slapped back down or rejected. The ES is the one that's outperforming. We squeezed a little bit higher since the last time I kind of showed the recording. As we're squeezing higher, I'm actually going to add more to the short there, believe it or not. There's 2 reasons for that. We're still within the value area high, still below the open, and then also I like to add, if I have a conviction on a trade, and we're near my stop loss, I like to add to it because my cost basis becomes smaller, or my risk becomes smaller in comparison to my reward. So right here, I'm going to be moving the DOM a little bit because at this point, I'm going to start to put in my orders to take profit back into the balance zone. So again, just referencing the same areas, the value area high, the mints levels, I'm going to be putting my orders to fill near the point of control, right? That pink level. And then the start of that value or balance area on the event that we start to rotate lower here. And again, this is all done because of the lack or inability of the ENQ to be able to get above the opening price. And so I'm going to let this roll through. You're going to see price start to get weak here as we pushed up. Again, this are probably just stops getting taken into the opening range. Especially given the NQ has not even reclaimed the open and traded near its lower end of the distribution of the open as well. These are all factors that I'm considering when I'm adding to a position, holding a position, and not being swayed by what it looks like on a candlestick chart. This is one of the reasons I don't utilize candlestick charts to trade, because if I did, I definitely would have been swayed away from being short biased, because you're going to hear me reference in the live stream, candles look very bullish, like we're about to break out. And most times they're not really fully accurate. So as you're going to see, price came down just a few ticks there from off the high, after squeezing higher, and we're going to start to rotate lower. And again, the divergence is going to pan out, and it'll look like this. Again, this is the bell curve distribution of the ES. I'm going to draw this out for you guys. And this is the mince levels, the top area, right? This is where I'm shorting, and this is where I'm accepting profit here within this zone. And this coincides with this little areas where I have my resting orders to take profit on it. So anything within this area to initiate a short is valid as long as we're below the open on the NQ. And then this is where I want to assume profit at the balance of price, where the price is most thick or most transacted during the session. You're going to see here we're going to start to sell off pretty aggressively right into it, and I'm going to lock in some profit. I'm going to let it roll through to the profit take environment, but if you want to watch the full thing, feel free to go to my stream there. I'm going to leave the video at the description for you guys. I ended up taking more profit. It went even further lower, but that's not the point of the video. It's just to pretty much give principle and ideology behind the divergence trade that I take day in and day out. Now, this strategy doesn't come in every single day. It's one of those strategies that I've had under my tool belt after I've been watching price trade using order flow tools such as auction market theory, volume profile analysis, along with the DOMs over a period of time. So this is something that I've just nuances that I've discovered after watching price transact for many times, many hours of screen time. So I hope you guys enjoyed the video. And if you guys want more information, you can do two things. One, check out my website, tradewithrick.com. I have educational content on there. Or subscribe to the channel, tune in live. I trade live, and I use these same principles along with other strategies to take profit from the market using order flow tools, in which that is mean reversion trades, volume profile analysis, looking for points of control, in and out of distributions. If all this sounds like it's over your head, do not fret. I have videos explaining this information. You can always email me if you have any questions. My email is found on the About page on YouTube. So I'm going to let this thing roll through just a little bit. You're going to see me take some more profit, and then we'll call it a video.